Hello traders, Damien here. Finally going to make this order flow video for JoryFX and for the benefit of you guys. When we get sometimes jumbled up in the order flow and try to figure out which expectation we are looking to participate in. But I wanted to just give a quick briefing here on the trade and why I was looking for the long and what ended up happening here that caused me to take the course of action that I did, as sometimes it's hard to do that when you're in the middle of a trade and you're trying to type on the thread. So initially my immediate expectation was for price to come up and make a new structure high. So when I came into my computer today, I saw the market was in a range and was looking to press downward, and the sellers were accumulating over the buyers. So imbalance should have favored the bears. So when the market tried to push up here and couldn't, it came down and made a very weak new structure low. Overall, we were still in an ABC and an ABCD pattern here. Oh crap! Sorry guys. We were in an ABCD pattern here overall that completed precisely right here, and then the buyers reacted very aggressively here. So when the market came up, I mentioned you guys I was looking for an area to sell around 75.80, I believe the price was, as I was interested in this area here. But the volume and the acceleration that we had here and the lack of rotation here pushed me not to take the trade. And the market very aggressively came up to bring a close up above all of these highs. This was a clear indication to me that this market wanted to retain its bullishness and go on to make that new structure high. Okay, so when the market pushed down, I got into this. Well, the candle changed a little bit because I closed out my charts and opened them up. But this was a very nice rotation candle that you can go back to my posted images and see. And I felt like I might be getting in a little early just because I knew imbalance should favor the bears. But the volume here was so good. If you can see, there's a lot of buying pressure in all of these candles. So I felt like if I didn't take that rotation there, I might miss the opportunity. And I was willing to weather the storm. Now the issue that I had here was that volume increased here and the market pushed down and made a very weak lower close. That invalidated my reasons for getting into this trade. And although it looks more like a retest than anything else, it did push lower. It did have greater volume, and it needed right then and there, instead of pushing into a rescue mission, since it made a lower close, I needed to think graceful exit. I needed to think to protect my capital and get out of this. So when the market did produce a rotation candle and the market started pushing up again, what happened was I knew that we were in an area that should, at the very least, with a very weak lower close and being in a range that the market should push up into, at the very least, this high area here. So it would give me an opportunity to get out of this. So I used a short-term structure to lock in that and secure that graceful exit before I was eventually taken out here. Now I was looking to get long again. I didn't like the volume here, so I wasn't comfortable with taking the rotation that happened here. Now when the market produced another new structure high and closed again above this, I told you that the bears should have at least one more push in them to take price lower. This was because this was a very aggressive move by the bears with a lot of volume pushing price down. It would be hard to conceive that the bears would just not try again to keep price pushing lower, try to create that imbalance that would eventually push price lower. So they tried here, they failed. Price came up a little higher, they came in here a little better. I was looking for a long, and then that's when I drew this area. I was more interested in a long here from a risk reward standpoint. But this towards the end of my session, and it was Valentine's Day. Wanted to have a nice lunch at a nice restaurant with my wife, so I decided to get away. But as you can see, the takeaway from here is that although we had a market that was consolidating, we had a market that looked like it was trying to get bearish. There was a market that was anyone would have been looking for shorts versus long. We had an expectation from the order flow of a new structure high. We had complex corrective process here that was very complex, very drug out, and produced ABCD pattern into a complex correction, and then the expectation of a new structure high was still valid. It was a great area to get long, but for rotation and other reasons here, we did not pursue that. I pursued it here when I got a more clear indication of what the market was looking to do. I knew I was getting in early. I had to weather that. Unfortunately, I got taken out, and I didn't feel comfortable taking the long here because of the overall volume that I saw pushing price lower. And then when I did get a second confirmation that this market was indeed going to head higher and I was looking for the longs, price just never corrected, and the timing got away from me as to participate in this very nice move to the upside. But I wanted you to see the value in understanding complex price action, complex range bound markets, and still have the situational awareness to maintain yourself and holding price accountable to an expectation and aligning yourself with those expectations to provide yourself with a high probability trade, and not chase what may be or what looks like or what feels like, or this market has to be overbought. It cannot go up any longer. Look, I have failed to make a new structure high, so therefore I am going to chase every bear situation I get from here on forward. There's still an order to the market. Even when this happens, there's still an indication as to who wants to keep control, who is losing control, and you need to always consider the context of what the expectation is based on the order flow that you're looking to trade, and align yourself with that strength. Okay, so now we're going to scale out a little bit. We're going to talk about order flow, we're going to talk about expectations, and we're going to isolate the three different order flows that should concern you as a trader, and some tricks that may help you not fall for a short-term order flow or longer-term order flow, but more focus on the order flow that you have decided to trade. So before we do any of that, you, the trader, has to decide, what kind of trader am I? Am I an intraday trader? Am I a short-term trader? Am I a longer-term swing trader? Am I a position trader? That's going to, and the answer to that question is going to dictate what order flow you need to concentrate on, and how you can use a shorter-term order flow to complement your timing on the entries, and you can use a longer-term order flow to help you look for extended targets or situations where we have a complex correction that's nearing an exhaustion point into the longer term expectation. So you need to be careful about falling for a trade that is just going to be problematic for you. So I know it sounds like a mouthful, but we're going to break it down and we're going to go through this video may be a little long, but I think it will have tremendous value to you. And at the very least, the goal is to give you a roadmap that you can follow consistently without getting confused by different order flows. Okay, so right off the bat, we need to understand that there's always going to be longer term order flow. Okay, if you scale out, it's just going to get bigger and bigger and bigger. The order flow, it's endless. You have weekly, you have monthly, you have yearly. There's different kinds of order flows, but that's insignificant. Okay, what you need to concentrate on is, what kind of trader am I? If I am an intraday order flow and I don't really know what that looks like, I need to take a look at the day. This is a 24-hour span, this vertical line and this vertical line. What is the clearest swing, clearest highs and clearest lows that I come across? That is the intraday order flow. That is the order flow that I'm looking to capitalize from. Okay, now there's shorter clear highs and clear lows, as you can see here. That is called the short-term order flow. You can use that to help you, okay, align yourself with the timing and entry, okay. And the way you use this is is if you expect a deep correction, as we would from this weak new structure low, you want to be careful about taking that first rotation as your expectation is for a deep correction. So what you can do is you can position yourself harmonically into a situation where now you know you're at a deep correction to this. It's in line with your expectation of a deep correction, but wait a minute. You can see that the short-term order flow on this second leg had what? Stronger momentum, strong projection, strong volume. What is that an indication of strength? Now you do have an amazing rotation candle here, but what does that do? That just weakens the risk reward of the trade, and with this volume coming up, you want to be careful. Okay, but what does the market do? Comes up again. Okay, and retests this area, but it came up a little higher. But that is how we use the short-term order flow to help us time our entrances and but manage our trades as we have price progress towards our profit target. We know that price does not move in a straight line. You can use that short-term order flow, if you so like, to trail your stop loss and lock in profit along the way. My trade management rules are different as to I allow price to come against me. I don't care too much about that because I'm trading the expectation. And if I start locking in profit based on the short-term order flow, I may be taken out early to only see price hit my expectation. Okay, so I trail a little differently, but there's nothing wrong with using that short-term order flow, since it's all going to take you to the same place, to lock in profit along the way, particularly on the larger swings. You know, when the market's tight and there's small little swings, you might as well just take profit because you're only asking to take yourself out. Okay, but now that we have identified myself as an intraday trader, and now I look at a day and I see the clearest highs and clearest lows, I can have an expectation. I see that this is a clear high. I see that this is, if I get below this level, I'm looking for what? Change in expectation failure. So I'm looking for new structure lows. Until we break this low, my expectation can only be a new structure high. Okay, and although this is intraday order flow and it's very clear and it's making what? Weak new structure lows. Okay, I still have not broken this, which is also an intraday order flow swing. It's just an elongated swing with great projection to the upside. So although this is making short-term new structure lows, there's also what? Significant breakdown here. We're having 100% pullbacks. It's just a range-bound market. But the expectation is clear that until we get below this, the expectation is for a new structure high. Okay, and we need to look at this very carefully to help us understand in which direction we should be trading. Now, at one point, I was considering shorts because price kept breaking down here, and we made an ABCD pattern. I knew that the bulls were going to react. I didn't know that they were going to react this well, but I suspected that they were going to react off of this area. I knew that imbalance should favor the bears, and as such, I was looking for a short as a viable shorter term intraday expectation of a new structure high. But the expectation here was nothing more than a new structure high longer term. Okay, so I'm aligning myself with what appeared to be strength to the immediate and the intraday order flow, which was very range bound, but accumulation was heavy on the bears. But then once price got beyond a certain point, okay, this became even more important to me, and I very quickly was able to switch sides and look for the order flow that was looking to continue and stay on the overall expectation. Okay, so let's scale out a little bit here. And if I was a longer term swing trader where I'm going to be in these trades for a couple days, just scale out. I mean, this market is very bullish, so it's hard to find that. But as we can see, we have here higher low, new structure high, deep correction, new structure high, higher low, new structure high, higher low, new structure high, what? Increase in projection, shallow projection, depth, I'm sorry, and then new structure high, higher low, a little bit of complexity here. Now you ask yourself, well, why did you pick this one and then this one? So what I'm looking for is I'm looking for meaningful corrections. You know, a correction that doesn't, you know, these are just short-term order flow that correct to immediate structure. This is short-term order flow. But if we look at the clear high and clear low, we can see that this was a correction of this. And when we see the market straw come up, we see that this is a deeper correction. So this is a deeper correction because we broke the short-term order flow. But what is it a correction of? It's a correction of this clear high and this clear low as one main swing. And same here. So we have short-term corrections, but where do we get that deeper correction? Here into an area of structure. Okay, and then the market came up, weaker new structure high, expectation deeper correction. Then the market comes up here, and you can argue this, but which is the clear high and clear low? Does this look like a correction or an attempt to correct? In the short-term order flow, it is a correction, but in the grand scheme of things, this is a correction, right? And this is the main swing. Okay, so that is the. But we're gonna go back in time into an area where, you know, we don't know what's going on, we don't know what happened, and we're going to look at these things in detail without the benefit of hindsight, so you can see how we do look at this, how we move things forward. And then I'm going to make it a point that when we do the live stream on the 21st, that we focus on order flow, and we also focus on harmonics, projecting forward. Those are the two areas that I may feel like you guys need a little bit of extra practice on, and a couple little things to finally tie it together. So we're going to go back in time here somewhere, and we're going to scale in the chart. Okay, and this is good. Okay, what do we have here? Okay, we don't need to go back to, you know, see 30 days of time here. We can see that this is a clear low here, and we can see that this is a clear high, which represents what? Somewhat of a longer term picture, right? Now we don't have anything to the left. So, for all intents and purposes, let's make pretend that the market started here. So we have this low, we have this high. This is a new structure high, and this is what could be a new structure low, or it could be a higher low. We don't know, we don't care. But we know that this is, for all intents and purposes, a new structure high. Okay, and if we break below this, we're looking for a longer term, what? New structure low. Okay, the order flow has changed, long-term order flow. Okay, the next level of clearness is right here, right? And we have a clear correction here, clear high, clear low, and then clear high again, right? So if we scale in a little bit, we see that this is a higher low, and we see that this brings us what? To another, or a repeat of our new structure high. Okay, so now we have a level here that if we say we break below this, we have a break in structure. Okay, and therefore we need to be looking for what? New structure lows on a shorter scale. This will be on a longer scale. So now we start creating that framework. Okay, so now price came up, and we see that being intraday traders, what do we want to see? Well, we understand that in the clear highs and clear lows from the intraday, we've made a higher low here, new structure high, and we broke structure here. So from an intraday standpoint, what is our expectation? Our expectation is now what? A lower high and then a new structure low. But how does that tie into the longer term? The longer term, we have an expectation of a new structure high. Okay, So because we broke structure here on the immediate, what can we tell ourselves? Well, because our expectation is a lower high and a new structure low, we know that we could expect a complex corrective, or we should expect a complex correction to this main longer term swing. Okay, and that harmonically should put us where? Somewhere in the neighborhood of here. Okay, now here we have the benefit of hindsight, and moving forward we won't, but I want you to see it with hindsight, so when we do it in real time you can understand some of the thought process and the reasons why we do what we do. Okay, now we also have what? The short-term order flow here to help us what? Identify where are these points of where we would like to get short. Now, is there harmonics in the short term as well? Okay, so you can see harmonics is just very, very, very precise. Okay, and when we take it one step further, and that's why I tell you, don't be afraid to draw lines. Don't be afraid to draw things out. Now here we fell a little short. This price only came to here versus here, but it's pretty damn precise. Okay, pretty damn precise. We have harmonics all over the place. Okay, it's just a very accurate way of understanding what price is working towards on a short-term scale, on a long-term scale. It doesn't matter whether you do this on a weekly chart, a yearly chart. It just doesn't matter. Market works towards symmetry, towards harmonics. I can't explain it, the reasons why. Maybe it's just the natural order of the market, but it just does, and it works. And you can't be afraid to draw these lines and project them forward. Okay? Now I'll show you how I do that a little bit here, and then in the live stream we'll focus completely on that and order flow. Okay, so now we have an expectation of a pullback into an area of structure, right? And then a new structure low in the short-term order flow, or into intraday order flow, I should say, all for this longer-term thing. So now we start to understand, okay, we still have a new structure high expectation in the overall, but how do we process this? Okay, what's happening here? Well, we know the price is raggedy here. If the market was very bearish, it wouldn't have zigzagged in here. It wouldn't have produced all of this nonsense here. And now we can see that the second leg to this coming down into this completion is what? Weaker, right? So we know we're expecting a complex correction here because of the shorter term breakdown here. If we got short here or here, we would have to weather this process, but the expectation was fulfilled. We know overall that we're looking for this ABC pattern completed. Now we're looking for a possible what? Realignment of this intraday order flow with a longer term expectation, as we should have a pattern completion here that the second leg was weaker. Now we can align ourselves with the possible starting point of this longer term alignment back to the upside. Okay, and if we get long here, what is the profit target? Well, break even is what? The 382, and the profit target is the 618 of the overall pattern, which is here to here, and price completed that very nicely. Not only did it complete that very nicely, but we also have some harmonics here that kind of work out very nicely. So like I said, price is going to go past this a little bit, fall short a little bit. It can't always be 100% precise, but as you can see, just the level of precision is just pretty scary sometimes. So we have a 3 drives pattern. This is what I was talking about earlier. Is we have realignment here, or possible realignment. We have a situation here where we do have a intraday expectation of a new structure low. We do have a longer term expectation of a new structure high. Which one do you follow? Well, what kind of trader are you? You're an intraday trader, so you need to follow this expectation. And don't worry about it. You're going to be wrong once when the market changes direction. Okay? So now if you're long here, you have to weather this. But now you understand that you have a three drives pattern completing at the 618, okay, of the pattern, because this is the profit target of this ABCD pattern. Okay? You are in alignment with the longer trend. So if you're looking to get short, again, because you see strength, because you see what you want to see, getting in here is problematic because what? This is the break-even point of this pattern. Okay? So now you have confirmation here of a weak new structure high in the short-term or intraday order flow. So now you have an expectation of what? A higher low and a new structure high. That tells you what? Three drives pattern possible into what? The completion point here. So now at this point, you have a three drives exhaustion, okay, into an area, okay, that's a profit target of this ABC to the downside. Okay, your intraday expectations for another new structure low, weak in nature because what? You corrected very deep to retest this area, right? So now you have a situation where, okay, I took advantage of this with the expectation at the very least we'll hit the 618 to take profit because it is the longer term interest of this market to go higher. I also have myself a situation where I corrected very deep, so now I have another situation where I might be early here into this longer term expectation, but now I have a situation where I can get short, okay, see if I can produce that new structure low, okay, or I can just wait to see what the market does and see if I can align myself long again into the expectation at hand. We have a three drives pattern completing into the 618 of a pattern completion into an expectation of a new structure low. So anything beyond three drives, you want to start considering, am I trading? Is that three drives and coming into a clear high, clear low, or a pattern of something else? Okay, the market's going to react to that. It's a good exhaustion point, and it also takes into consideration the larger scale. Okay, so having said that, the market moved lower to produce a weak new structure low. What does that tell you? Well, that tells me that what? I need to be looking at what? Possible realignment again. Possible situation where the market's going to correct deep. Can I look for longs? Yes. You were already short. Okay. Did you complete from a harmonic standpoint? Yes, you did. Okay. So now you have another, again, situation. Remember, three drives. Okay. So we have 1, 2, 3 with severe breakdown to the downside. What is that telling you? Okay, the short-term order flow, the intraday order flow is really serious about realigning itself. There's significant breakdown here. I am now looking for a possible realignment into that long-term. I had a nice run here. I took profit or I got taken out if I trailed, whatever the situation was, whether I got short here to take advantage of the intraday expectation. That was great. If not, I waited this out. I took it. I studied this. It was overnight. I wasn't up. Whatever. But now I have a situation where now the market is showing some of that exhaustion. The market is pushing down. It's pushing volume. Price is not going anywhere. If I do take the long, what could be my expectation moving forward is at the very least you should expect the test of this, or finally this market turning around and making that push to the upside. Okay. And now, in looking at this from a standpoint of clarity, we have this and we have this. Okay, so we take this, we find the lowest point, which is right here. We have the lowest point, which is right here. And we know that somewhere in this general area, price, okay, will reach a harmonic completion or a harmonic expectation. Okay, so now what we're looking for is we're looking for realignment of what? Short-term and long-term. Okay, this is the area that you're looking for. This doesn't create long-term and long-term realignment. What does? A break above, close above this. This is the clearest high, lower high here. Okay, we made a very weak new structure low. The clearest high from that is here. So before we can say that this market is now rejoined its long-term expectation and ceased to try to push lower. We have to get a break above, close above this. Now, aligning yourself with that longer-term expectation puts you looking for trade somewhere in this area. Okay, and there's nothing wrong with that. It creates better risk reward as opposed to waiting for price to break above this, then gaining a higher low somewhere around this, and your stop still has to be way the hell down there. Okay, so but we already have the framework. We already know what the market is working towards. We already see how those three drives patterns come into areas of interest of the longer term. Okay, because if we draw a ratio of this, we can see that again, three drives pattern coming into what? The golden zone of something larger. Okay, this tends to work very well. Now I wouldn't take it just because of the three drives pattern, but there has to be significant breakdown as there was here and as there is here. Okay, and now the market, we have a very clear expectation of the market to fall somewhere into this general area. We would expect the market to fall into somewhere in this general area. So I forgot that I can't hit my shortcut tool because it cuts off the recording. And we can draw ratio extensions here and see that we have the 127, and we have a very short situation here of a very weak new structure high, pretty much almost a test of the high. I have a general expectation if we break a high, price should hit the 127 extension. So I would look for price to get up here. Now you could say, okay, I have something down here, I have this down there. What else can I do from a confluence standpoint? You can draw an inverse extension. This may be a little advanced for you guys, but I can draw an inverse of this area here and say I want to target this area over here, and we'll see what price does. Okay, but now what we have here is what we know. Okay, now this was with the benefit of hindsight. Price produced a new structure high here. That's realignment of the long term and the short term here. So now we're expecting price to come back into what? An area of structure. Where is that area of structure? Well, we have something very nice in this general zone here, right? So let's clear some of these fibs up. I don't want to make it too messy for you guys. You guys already see the value in the harmonics. Oh crap. Okay, here we are. Sorry. Press the wrong button. Alright, so sorry guys. So the market corrected into this area. I was going to draw a ratio here. It's a first change in order flow, first change in expectation. So we would expect what? A deep correction. Okay. Are there harmonics here as well? This is where the market try to correct. Now it's hard to say here, here, here. When you have something like this, just pick the lowest point or somewhere in between and project that forward. And it's close. Okay. But we don't care about that right now. What we do have is we have an understanding that the market wants to push higher. We have an expectation of a higher low, which we seem to have somewhere in our area of interest. As we can see, we have a structure here, and this is the area to get long. And now what we want to see is we want to see how price progresses up, okay, and see how the expectations hold up. Whether the short-term order flow is going to allow us the opportunity to get up into this area. Okay, so now that we're here, we can push price forward. We can fatten things up a little bit. Let's clear this. Delete. Let's delete this. Let's delete this. Okay, let's fatten things up a little bit so you guys can see better. And as we can see, sometimes when you fatten things up, it changes what the momentum looks like. But we can see here that we have the market. Short term, we made a new structure high. Okay, we know that this is a clear low, this is a clear high, this is a short-term expectation, right? Shorter term here. Okay, we broke below that. Okay, new structure low. So what does that tell you? Possible complex correction to the downside. So if we take the long here, you have to be willing to absorb that. Okay, at the very least, the market should at the very least get into this general area here before what trouble sets in, right? This is where the area of trouble is going to be. And if I was long here, this will give me room to protect. Okay, but moving price forward, what's happening is the price is just moving sideways with a bearish indication to it. Price is breaking down. We expected what? A complex correction. We don't want to see price trade below this 700 area, as that would change our expectation back to a price moving lower, but it hasn't changed the long-term expectation. Okay, remember, we're looking for price to come up here. That is the expectation that we're looking to participate in. We're not looking for price to come down here. Okay, but we got to understand that we're opening ourselves to a complex corrective process because we broke the intraday structure here. Okay, we've made a higher low overall, but in the intraday order flow, the one that we're interested in, we made a new structure low. We could expect a lower high into this general area and for price to possibly try to make a new structure low. And notice, by understanding that, okay, and that is the expectation of the shorter term, we could see that play out and understand that because we are trading this situation, we understand what the big picture is working towards, but we have to be understanding that this is what the market right now from an intraday standpoint is working for. It's being confirmed by the range bound market that we have here, and also by the orders. It's just the market is just not able to push higher yet. Okay, and we talked about price coming into this general area before what? The bears may come in again. Where did price do? Exactly that. We didn't have the benefit in hindsight. Okay, but having the context of the market in front of you, understanding what the market is looking to achieve short term and long term, helps you understand in which direction you need to trade that is in line with the order flow that you're looking to participate in. But also understanding that, once we complete a one-to-one to the downside, we're going to be looking to possibly realign ourselves with the longer term, and that we need to be looking for longs. Okay, so if you're short here, okay, if you're long here, you just need to understand that that was a possibility because we identified that before that happened. Okay, now we see it happening, so you need to either be conscious of that. Your stop is down there. It is what it is. You got to suck it up and take it, or because you understand that you could get a complex correction, you're going to be careful about getting in and trying to time your trade a little bit better. Okay, and the market made a very weak new structure high off of this clear high global. They didn't complete a one-to-one to the downside. Instead, this market's trying to get bullish again. You've made short-term new structure highs, and you've broken a clear high and a high. This is a lower high and a new structure low in the intraday order flow. That now you have what? Realignment of long-term and intraday. Okay, so what you want to do here is now you want to position yourself. Okay, if for whatever reason I'm coming to the market here now, and what should I be doing? I should be looking for a long. I'm looking for a deep correction here, and then looking to get long to participate in this expectation. Okay, so you always need to have that context in mind. It's going to take a little bit of practice, but it's important for you guys to understand which order flow you're looking to trade, what is that order flow looking to achieve, and the alignment of the long term and the short term. It doesn't mean that you can't take a trade against the long term expectation when you have when you're with when the order flow that you trade has a specific expectation, and the order flow suggests that it's okay to take that trade, by all means you don't have to have that alignment, but understand at what point the market may want to try to realign itself with the longer term, so you can be cautious in that area and not pursue your shorter term, because that's where likely where you are more likely to have that expectation fail you. Okay, so you want to evaluate the strength and weakness heading into that area, which in this particular case will be down here. Although we would be looking for longs now, because now there's alignment of longer term and intraday. So we want to understand those factors, but understand that the market may be working towards something down here, which would invalidate this, as we talked earlier about 700 being the area that price needs to hold. Anything below 700 and the expectation changes. Okay, so we'll see what this market is looking for. The market has spoken on various occasions that it wants to keep going up. We have an indication here that price is going to get somewhere in this neighborhood. Okay, we may know further ahead in time with a little more precision as harmonics develop as to whether this target will be, somewhere in here or where that may be, or it may fail altogether. Okay, right now we have an intraday expectation of a new structure high, higher low. Okay, we have volume increasing here. We have a complex correction. The main swing is this and this. Okay, where's the structure? The structure is right here. Same area, maybe a little lower in this particular situation. What are we looking for? Well, we're looking for something like this. Okay, let's see what the market does. Okay, now did you see how we identified only by looking left? What is the area of interest? Where's the buyers coming? Buyers coming in here. Buyers coming in here. Sellers are defending here. Seller defending this area becomes extremely important to me in looking for longs off of this clear low, clear high. What is my expectation? My expectation is for a new structure high. Why? Because the market produced one here. I expected something into this general area. Sometimes I get a deeper one, which is great for risk reward. Sometimes I don't quite get there and I miss the entry. That's okay. At least I'm identifying areas of interest with a very high degree of precision. Okay, and now this market is increasing momentum and volume to the upside. Let's see where this market goes. Okay, now we have a weak new structure high, and now we have another correction. Now that should tell us what? That we're going to correct deep. Where? Maybe even down here again. That's fine. That would be a 100% correction, but not 100% unreasonable one, since we are overall in this area here, we have what? A clear high and a clear low. Okay, so we could have a retest of this area and still be okay within this main swing. We have to understand these things. We have to have that context in mind. It doesn't invalidate anything. It makes things more complicated, but it is what it is. Okay, situational awareness. What is the market working towards? What's reasonable? Okay, and what against what is expected? Okay, comparing and contrasting. Okay, so now we know that we have an area here that the market may what? We have an area of interest here that in this particular swing it will be consistent with what? A deep correction, right? An area here that we would target to what? Go long if we're not long, right? We want to see how price gets here. Okay, we want to see, and if we're long here, we protected. Okay, what was the expectation off of that? Well, the expectation off of this was nothing more than this for price to get here. So at the very least, in the intraday expectation, we expect price to get to this area. Okay, we expect this level to hold, right? That would change the intraday expectation, and will have us looking for what? Shorts again. Okay, so now the bigger picture is still there, but it becomes less important, okay, if we break below this. Okay, it means we're going to find some harmonic situation that completes somewhere down here to what? To look for longs again in realignment. Okay, but our immediate or intraday expectation is what we're trading. We need to pay attention to that. Eventually, we're going to get to where we're going to get to. It's all going to take us to the same place based on which one fails and which one holds. But it's important that you guys understand that. Okay, so now okay, notice we bounced off once, retested the high, volume came in, came back again, retested the area. So the area is good, but is there enough interest, enough follow through, enough carry on to help us understand that we're going to achieve this? Well, right now we have issues with that. We're in a complex process of this main swing, right? We retested the high. We haven't made a new structure high. We made a short term what? New structure. Now we can use a short term to help us find the long term. Okay. Now, in this particular situation, we have breakdown here, but we still have what? A clear expectation until we break below this. Okay. So now our short term order flow says what? This target's in trouble. Okay. So let's see what happens. Okay, so again, we had a situation where the short term is doing what? Here, corrected 100%, made a weak new made a projection here. It made a shallower depth. So what does that tell you? Bears strengthening to the downside. Projection increase. What does that mean? Bears strengthening. 100% correction of this. What does that mean? Bulls trying. Okay, what's the immediate expectation? New structure low. Okay, so now the market's pushing down into these lows. Okay, does it invalidate the short term? Not yet. If we get a close down here, yes. Does it invalidate the overall longer term? No. What could we do? Okay, well, I'm looking, if I'm not short now, I'm looking to see where I can realign myself with the longer term. Okay, and now I can say I have a clear high here, clear low a little further down here. Okay, let's project that forward. Down here, okay, it's a nice area. It's consistent with this area that price already found support at. So let's see where price goes. Okay, we have a good reaction here. Not necessarily a bad place to get long. Okay, as we can see, the buyers were trying. Overall expectations for this market to what? Stay bullish. It's been trying and it's been achieving that. Okay. And the bears are just a little too strong right now. I'll be very concerned if I was long here. Where's my stop? Right down here. Okay. Where's my stop best case scenario? Way down here. Do I want to do that? No. Okay. Because this is what will invalidate my trade and my hypothesis. If I close down here, somewhere, that invalidates all the reasons for getting into my trade. Okay. It looks like that's going to happen here. Okay, but you never know. We still got to do the dance. We still have expectations. Okay, in this particular case, we wouldn't have been stopped out. We found a place to get long here. So now we're testing these areas here. Now we can definitely get to a break even, protect our trade. Okay, we know that the market's weak on the buying side, but we have a clear expectation. Okay, now we'll definitely get to a break even point, right? So you notice how I used the short term and how I had an expectation, how I didn't let different order flows confuse me. I have a one-track mind to trade my intraday order flow, and I'm going to use the short term, okay, to align myself with the longer term expectation. But if the strength of the intraday is still for a new structure low, what am I looking for? That new structure low. That's not the case, okay? Because I broke up here. I made a weak high here, so I'm not looking for a new structure low. I have realignment of long term and short term. Now here, I was looking for a short term. Why? Because that was my expectation. Okay, but I had in mind the long term and the intraday and using the short term to my advantage, as I showed you here. Okay, so now we're long with the expectation that price at the very least is going to get up here. We're at a break-even situation, so we don't care what happens. We know that there's still issues here. We know that the sellers are trying to be aggressive near this area here. So, if you're a trader that likes to be aggressive and take profit, take profit. Okay? If you're a trader like me that, would rather see the expectations play out as they do 70% of the time, so I have a 70% chance of price hitting this may be one of those that fall within those 30% of the times. But 70% of the time, I'm going to hit my profit expectation. So what does that do over a longer period of time? Make me a hell of a lot more money than just being aggressive and taking profit. Sometimes there's reason to. Sometimes the market's just a humongous grind as it is here, and it may make sense for you to not let 30 points go back into the market and end up with a break even. I don't know what your goals are, okay? But I trade the longer term expectancy of my trade plan, as that in the long term will make me a lot more money. So I don't care if I spend the whole week getting break evens. That doesn't matter to me, okay? I'd much rather protect my capital and trade the expectation and have the expectancy that my trade plan has, as that's going to keep me and my account very healthy for a long period of time. So keeping in with the process here. So what's happening? We have some breakdown. We have some shorter term breakdown of price. It looks like in this situation we might have gotten taken out at a break even. What do we have here? We don't have another new structure high. We have a retest. We have a market that's produced a low, a high, retested a low, retested a high. What does that tell you? We're in a range. Okay, you need to be also able to understand when the market is within range. It's inside a range. Okay, and the market is in range, and now we could see that we would expect the buyers to come in somewhere around here, but we do have some acceleration here. We do have some price coming down into this area, so price may break below that, and that would change our short-term expectation. Okay, and we saw that coming. We saw the market was coming to this area with a lot of strength. And what did I tell you? That this area is in trouble. That we're probably going to see price break below that, and that would change our what? Our short-term expectation. We retested the high. We got past the low. Now we should be looking for, from an intraday standpoint. Okay, we have clear swings here. We should be looking for a push to the downside, and off of this clear high and clear low, we still haven't broken below this. Okay, so technically in the longer term picture, we should still be looking for longs. If we break below this, we should consider shorts. But this market is speaking to us already, and we say, okay, if I don't have the guts, or I don't feel not feeling this situation, then I need to try to position myself for a long. Okay, but what do we see here? We see that overall we have weakness here, choppiness to the downside, and here we have a clear intention of price. We have price speaking to us with more volume, with more momentum. This market is gaining strength to the downside, so we want to be cautious about what? About looking for anything long at the moment, even though that is our expectation longer term, even though that is a situation what we may have here. That may very well play out, but it may take a few swings before that happens. Why not take advantage of the immediate strength and the immediate expectation from an intraday standpoint, as this is clear intraday swing action, and position ourselves for a longer term situation. So in this particular case, I'm looking to participate in a possible short, where right around where my cursor is, around 780. Okay, so as the market comes up, just about hit the 780. Okay, there. So now we have an indication here. Now we're looking to get short somewhere in this general area. Why? Because the market from an intraday standpoint has spoken. Has not broken below this, but what can we do? We could probably expect price to test this. Okay, so now the longer term picture realigned itself and said, I want to make a new structural high I can. Okay, the expectation from this, since this was the first expectation, what? A deep correction? We're there now. Should we, oh my gosh, should we be looking for longs or should we be looking for shorts? Well, the intraday order flow says we've made a weak new structure low. I expect a deep correction into an area of structure, and the market should try to make another push to test these lows. Okay, my expectations for this market to, at the very least, try to do that. So I'm an intraday trader. This is my intraday expectation. Okay, so I want to look for a short, okay, and not chase anything beyond this to the downside, as I know I'm now getting into the territory where the longer term interests are going to be more of a big picture, and the market's going to try to seek some bullishness down in this area. Remember, we talked about that 700 level. Okay, so we're waiting for a rotation in price. Boom, right there. What does that offer? Amazing risk reward, great rotation. Am I happy about this volume going up? Am I happy about this projection in the short term? No, but this is a great area to get short in line with this expectation. Gives me plenty of room that if the market just comes down here and dies, I can make a decision quickly to enter or protect or get out. Not enter, but get out or protect. I have options. Okay, so this is the area that I will look to participate in. And what does that do? Puts me right back into the area of interest. Okay, so harmonically speaking, I am looking for this market to come to this general area before what? Buyers come in. Is there a structure there? Yes. Is there buying interest at this level? Yes, yes, yes. Yes. A little higher? Yes. All over here? Yes. Okay, is this justify taking the risk? Well, I enter here, my stop has to be above there. Hell yes. Okay, and now you're starting to see how we use the order flows and how we use the order flow that we're looking to that we look to trade to participate, and how we keep the context of the market in our minds. Okay, so this market now has made a short-term new structure high against us. It's going to retest this area here. It's retesting it now. The market came in again. Okay, we came back into this area here where the buyers are coming in. We got a good rotation in price. Okay, so however you wanted to handle this, if you were at a break even, you would probably be taken out here. I would not be at a break even. I would just be still in this trade, and I may be taken out for a full hit here, and I'm okay with that. Okay, as I would have gone, I'm not sure where I would have placed my stop. It would have been above this area, so I might have gone taken out, might have not. The point is that we had a situation here where we entered here, okay, chasing or looking for the intraday expectation. Okay, we also knew that this area was going to possibly find possible sellers. Okay, we also knew that pardon me, that the longer term expectation was a new structure high. We knew that price was looking to possibly get down into this area before we needed to look for longs again. We had a clear intraday expectation of a new structure low. We did have increase in momentum, but this posed a very good, decent risk reward opportunity. And depending on how you would have handled this situation, you would have either been at a break even or taking a loss. Okay, but we knew that the market was working towards what? At the very least this, until this low was broken. So if you took that chance, you took that chance, but you took that chance knowing that. You took a chance that because the market spoke to you, and you're in one of those situations where the market overall is looking to stay long, you're taking that added risk, and the risk reward here was worth it. And I would have taken that trade any time of the day because the risk was very small. Okay, so on the market to see if we can come up and hit that. Okay, it looks like it did right there. Okay, so now you know, and you can see this. We're at an hour. We wanted this to continue. So now you can see how we knew the market was working towards this. But there are opportunities within this from an intraday standpoint, so you don't sit around just waiting. That you can take chances on trades that where the intraday order flow is speaking to you, that offer great risk rewards, even though you're against the longer term. You're still, increasing the odds of being taken out, but it's still a very high probability trade as you have an expectation from the intraday or the immediate order flow. And there's no reason why you can't try to capitalize off that. Most of the times these trades are going to offer a opportunity to either get out with a small loss or get to a break even, or you can choose to handle these trades more aggressively because they're against a longer term expectation. But don't be afraid to make these decisions based on your chosen time frame, the chosen order flow that you're looking to participate in. Trade that order flow, but understand what the bigger picture is working toward. Understand what those harmonics come into play and where they terminate, so you can know when you need to not continue looking trades in a particular direction and just wait for the market to realign itself. I hope this video had value and showed you how this process can be. It may seem overwhelming here in this video, as it was a difficult market to process, and I was able to do it with accuracy and success. And we had one trade here working against us, but there's tremendous value in just understanding the context of the market, understanding what the market is working towards, and hold price accountable to your expectation, to the expectation that you're looking to trade. It's all going to get you to the same place. Okay, so that's all I have for this video. Please comment more than anything on this video. Comment, ask questions. If I need to revisit this video with another video, I understand and I'm willing to do that. But we're going to look at this in detail when we do the live stream on the 21st, and I'll be happy to make another video before that if we need to. Yeah, so that's all. Please comment and ask away if you're just totally confused and this this was just too complex. We'll do this again and we'll scroll to an area that maybe the price action will be simpler. I like to do this without the benefit of hindsight, so you can see the process moving forward, where I haven't seen it, nobody's seen it, and you can see how easy and hard it can be. But even in difficult, challenging markets like this, we can still have the context, we can still have the expectation, we can still navigate through the chart and not allow the three types of order flows that we're looking to participate to help us with our roadmap for price interfere with our decision-making process, and how we don't need to just trade the longer term, how we can use the shorter term, and how we can use our intraday expectation, trade those, and then align ourselves with what the market is working towards. Okay, I hope that makes sense. Again, I'll just wait for your questions and then we'll address them as they come up. Thank you very much, and I hope this video once again has tremendous value to you in your trading. And I will be focusing on this specifically in the live stream. Thank you and good night.